Hello, this is Dale, and this is my nightly video blog for Wednesday, February 24th. Just a reminder, I'm going to be on vacation next week, so tomorrow night will be the last blog you'll hear until Sunday. Let's see, that'll be March 6th. I'll be back late on the 5th, and we will have a blog on the 6th, getting you ready for that first week in March. One of the things I want to do tomorrow is watch the RUT, and if it makes sense, go ahead and exit the bull put side. We have done quite well on this trade. We've done better than I usually try to do, and that's to make a 10% profit on our margin account. If we take a look at an anatomy of the trade, well, first of all, let me just go over the chart so that makes some sense. We're going to just hold on to our calls. I'm going to hold on to them at least until tomorrow. We'll take a look tomorrow night, but I wouldn't be a bit surprised we'll be exiting a lot of those as I'm getting ready to go on vacation. I don't want to hold these while I'm not going to have access to the internet. I want to get rid of the calls. I'll probably hold on to the Verizon put, because I think if anything that might have a chance to come on down, and maybe I'll just balance that out with one of those calls, so we have a call and a put for next week. Now, you're going to be, in charge of watching this next week. I'll be interested to see what kind of trades people come up with, and just because I'm exiting some trades, tomorrow and on Friday. If you don't feel you want to do them at this point in time, and you want to watch them till the ribbon crosses over, which is one of the things I watch, you go right ahead and do that. And remember, this is your trading, and I want to teach you how to trade the account. Okay, so let's go over and take a peek at the RUT, and let's look at our theta trade on the RUT. And once again, we got in way back here on the 2nd of February with an iron condor. And at that point in time, we had remember, an iron condor is both a bear call and a bull put vertical spread. The bear call spread we set up was at 1130, selling the 1120 and buying the 1130. So it was up around here, right by the plus 1 on the regression channel. Of course, we were right about here when we set it, just a little bit below the regression line. It dropped down, and it had quite a drop here. And when it got down to this level, I thought it made a lot of sense to go ahead and leg out. In other words, buy back the bear call side. Remember, with vertical spreads, when you first set them up, you're selling for a credit. And when you go to close them out, you're buying them back. Okay? So what we wanted to do is we want to, on the bear call, where we originally set this up by selling the 1120, and this is for the month of March, and buying the 1130, and we got 90 cents worth of credit. To exit that, we buy it back. So we're buying the 1120 and selling the 1130 March call. And we did that for a debit of a dime. So our net profit on the first leg got us 80 cents. In other words, this move down got us 80 cents in the trade. I thought at that point in time we were going to get a lot of support, because it was down below the -1. Here was a support point here. It actually did have a day below that. But I thought holding on to the bull put side made a lot of sense. And indeed, that has worked out very well. As you can see, it was very strong to the upside. Crossed over the ribbon. We held it. And it's been very nice. What we did is we sold the 910 and bought the 900 put for March, and at that point in time we got 80 cents worth of credit. To close that tomorrow, what you want to do is you want to buy back the 910 and sell the 900 put, At this point in time, at the end of trading today, it was worth 30 cents a debit. So watch it tomorrow. If it's a strong day tomorrow, you might just want to let it go for a while. But sometime during the day, I think it makes sense to go ahead and get out of this trade. You might choose to let the market open. If the market opens strong and continues to push a little bit, let it go for a while. Let it go. But sometime during the day, at your choice, go ahead and get out of there. If it moves up, you're going to get even less of a debit here and more profit. What we try to do is get 10% on our money, on our margin required for the trade. At this point in time, we have a net profit of $1.30, and when we originally set this up, we had a credit of $1.70. So what I'm trying to do is get 10% or $1 on these trades per month. We got $1.30, and that's 130% on our expected profit for the month on this theta trade. Now, for the last 9 months, we have had 8 winners and 1 loser. Last month we had a loser, but up until that we had 7 winners, then a loser, and then this month we come back with a 13% or 130% winner on this theta trade. It's a very powerful trade. I love the spreads. I like to do iron condors, which is both the bear call and the bull put. If it makes sense to do so, I like to do the iron condor. Otherwise, I'll go in one direction. When we first set this up right back here, you can see that both the RUT indicator, both the bearish and the bullish, were headed down. And that makes a lot of sense to go ahead and set up both. But we got a strong move to the downside that pegged this. Where the bullish went down, we got out of the bear call, and then it reversed nicely for us, and we legged out of this with an excellent profit. And that's the way you want to trade these theta trades. Now let's just take a peek at our directionals that we still have open, and the first one is AAPL. Let me blow this up a little bit. You can see AAPL is, just going by the ribbon is very tight here. If you choose to get out of Apple tomorrow, I think that probably makes some sense. At least watch it till about 10 o'clock. But if you choose to get out of Apple, I think that's a fine decision. We have a call in Cisco, and Cisco's been very strong, so I'm going to let this one go for a little bit longer, at least through tomorrow. DHR it was a very, very nice move. It had a strong day today. Let's let this one go. Gilead Science, we might choose to just let this one get out of this one just like we would do with Apple. We've got Qualcomm, and Qualcomm's been an extremely strong, profitable trade for us. We'll just let this one go. And that leaves us with the one put on Verizon, and we actually had a ready set today, and that's why, if anything, I'm going to just let this put go on the week that I'm on vacation, and it might be nice to balance that out with a call, and I'll talk more about that tomorrow night. Taking a quick look at our ETFs, and remember, if you trade this while I'm on vacation, what you're looking for is something when it is overbought or oversold. What you're looking for is a measured move. When you get that measured move, go ahead and take it and look for Fibonacci to exit. You can see that we talked about this last night, that if we got a major move to the downside, that a trade in TLT might make sense, and that's exactly what happened here. There was a measured move right here. If I blow this up, you can see it a little easier. It came down pretty strong, had a measured move right here. Wasn't a real strong measured move, but it was one that you could have got in and profited from. And remember, on the weeklies or the ETFs, what you want to do is wait till it gets overbought or oversold, look for a reversal, look for a measured move, get in, and then exit when you get a Fibonacci of 127 or 161. And that's my blog for tonight. Come on back tomorrow night. Bye-bye now.